Hello, Tom Levecchio here with the latest edition of the New Theory podcast. Today, we get a very, very special guest, David Nilssen, who is the CEO of Guidant Financial, and they work with over 20,000 business owners historically. They have 8,000 customers, and what they do is they help people start, run, and execute their business needs. So we are in a bad situation. I asked David to come on. Candidly, this is probably not going to be the most upbeat podcast because I'm having a tough time. So first, I hope you and your family, if you're listening to this, are well. And to put things in perspective, other than losing an uncle who is a bit elderly, which still doesn't make it better, I haven't lost anybody other than him. And my prayers go out to my cousins. But for the most part, we are well. And then David, I hope you and your family are well. Welcome to New Theory Podcast.
Yeah, thanks for having me on. I'm sorry to hear about your uncle.
Thank you. And so I want to start off with, so I'm going to open up a lot. I have two lines of business. I have a franchise UPS store, one unit, and then I have a marketing media company, which owns New Theory, Digest Magazine, and then a marketing agency. So I wear a few different hats, right? So let's start off with this stuff goes down. All this crazy stuff happens, and I'm like, holy cow, I need money, okay? Because both businesses got crushed in terms of cash flow. So, David, I applied for the EIDL, right? And we'll update what happened this week. So I applied to the EIDL, and I'm told, hey, you're gonna get 10K, emergency money, 3 days. So I apply for, we'll call it UPS store, and we will apply for X Factor, which is a marketing company. So I got neither. I got a referral number. It says, hey, here's your tracking number. When I go online to use a tracking number, there's no way to track. And when you call, David, I kid you not, I'm not kidding. On my children, it hangs up on you. So walk me through first the EIDL. The EIDL came out. What was the intent? What's the actual? And where are we at now?
Yeah, so the EIDL, or as we call EIDL loans, the economic injury disaster loans, are different than your typical SBA loan, because the SBA loans are typically provided through the banks. They're just guaranteed by the SBA. But the EIDL program, the SBA is actually lending those dollars directly.
Correct.
The economic injury disaster loans have been set up to help with things generally like a hurricane or a tornado, natural disaster that affects a specific geography. In this particular case, what ended up happening, obviously, is the pandemic has affected all Americans and all businesses to some degree, many to a much larger extent. And so the SBA has been in a position where the amount of requests that they're having to process is significantly larger than they've ever had to historically. The EIDL program, just for your listeners, you can receive up to $2 million on a 30-year fixed loan, and it's 3.75 is the APR. So this is like looking at a mortgage. It's about as cheap as money as could possibly be obtained by any business. And then originally they said they'd give a $10,000 grant for people for applying, and then they changed that to, well, it's actually $1,000 per employee, up to $10,000. But to this day, I only know of very few people that have actually received any funding. Now, coincidentally, yesterday I got a message from somebody that I know in the Seattle area who applied for the loan. Originally was told they were going to get 25, and then out of nowhere was given $500,000. So, the SBA right now, I heard a friend of mine in the industry refer to it as the lottery. There's no rhyme or reason. We don't know when people are going to get those dollars. It's significantly oversubscribed. The communication has been disastrous. And if you do call in, you're the first person I've heard that I've heard of that is getting hung up on. But most people that I know when they call in are actually getting a number that they are in line, and it's never less than 500. So you can imagine calling in and saying, hey, you're number 550 in line. At this point, they're obviously not able to process any more applications because they've oversubscribed their capabilities. So until or unless they raise the ceiling limit, those that have applied are now in what I would literally refer to as a lottery system. There's nothing that I know of that you can do to help gain more attention to your file outside of either waiting in line on the phone queue or just going in and randomly checking your tracking application there's also no way to really get an update on that.
Okay, so this is a very real world podcast. We talked earlier before we jumped on. We don't edit. It's a real deal. So at this point, and we're going to go through different stuff. At this point, myself, we're going to focus on me as a use case because I don't want to do what ifs. As you know, and I need money, right? So at this point, and remember, you know, we have to follow rules and guidelines and stuff. This is just one man's opinion. You're not a subject matter expert. Do I kind of write off, hey, I ain't getting this, or is there some hope that I may get it for one of my two businesses?
Well, I mean, I think there is a possibility that you could still obtain some funding through this. I had a conversation with one of the regional SBA directors about a week ago, and she referenced that they were going to try and start processing much smaller loan amounts to many more people in hopes of deploying capital faster rather than going through the larger sort of underwriting process for loans up to $2 million. So I was surprised yesterday when I heard that someone I know here had received $500,000. Because my expectation, based on the comments that I had, the conversation I had with the SBA, regional SBA director, was that what was more likely to happen is you would start to see increments of $20,000 to $25,000 being dispersed much faster to more people. So if that's true, then it's possible that you could obtain funding. But I've always said, you know, hope is not the strategy, right? So we've got to look at other alternatives in the meantime. Now, one thing I will note is there's, you know, strategically, my hope is, and I firmly believe that the next day or so, I mean, it may have already happened while we've been on this podcast, we're going to see the limits for the SBA raise. This happens it's happened many years, I should say, where the SBA runs out of dollars towards October, November, because we've had a good year in the economy, and then they raise the limit because they never want to see the SBA be a choke point for small businesses getting access to capital. So I expect that we're going to see that ceiling raised. Now, I would definitely focus on the PPP program in terms of where I would.
We'll get there, David. We'll get there, David. So I want to do the progress, and I'm going to cut you off. This is important. So at this point, because I have commitments, and here's the other part: I've been hoarding cash by design, but I haven't been paying bills, and some vendors have been good about it in terms of like personal and professional, and some haven't. So I have to start paying bills, which is depleting my cash. So I just want to, only because I have super ADD. So at this point, I'm going to shelf the EIDL. Now I want to go to the PPP, and the reason why I paused you was this reason. So okay, so PPP comes down. I'm there, bated breath with my computer, and I go to do it via Bank of America. I have my relationship with them for 13 years. My sister bakes the branch manager cookies. We have a good working relationship. I always say you need a great lawyer, you know, a great accountant, a great plastic surgeon, and a great banker. Banking relationships, as you know, are not as intimate, but I always made it a point to have good local banking relationships, even if it was a chain. So my sister bakes some cookies, the whole bit, right? So we go to log in to Bank of America, and they say we're not eligible. Sure, she runs over. They let her in. Of course, she's out of her mask on. And they say, Antoinette, we love you. We bake us cookies. It's out of our hands. We are not accepting loans that there's a loan, that there's not a loan relationship. I'm like, well, we have a deposit relationship. So don't care. You don't have a loan with us. So I was hugely disappointed because we didn't need a loan because we're doing well. So then I called Chase. You're like this one, David. I called Chase where I have a loan relationship. I have a credit card. They lend me money. And I go to Chase. I say, hey, I need PPP money. And they look at me and say, whoa, we're not going to give it to you because you don't have a deposit relationship. You have a loan relationship, but you don't have a deposit relationship. The opposite of what Bank of America is saying. So I'm like, what the hell's going on there? And on that day, the CEO said, hey, that's what we're going to do. So I don't know if it's political pressure. Bank of America got eviscerated on Twitter, eviscerated. So they opened it up. The manager called my sister because she baked her cookies and said, hey, we're now opened it up. You're the first person I thought of. We went in, we filed the PPP. Then we had this thing that said all they needed from us was to verify the information. I went in, I'm a little bit of a tech background, had to get my girlfriend involved because she knows a little better than me. Took me a half hour just to verify. We sent it in, that was Tuesday. Meanwhile, 2 weeks passed, right? Then it's sent in, didn't hear anything else, and then I hear it's dried up. So delay number one is because we didn't have a loan relationship. delay number two was out of nowhere. I got a call on Saturday saying, hey, if all your stuff is in, we're going to submit it. Not we submitted it. And then number three is, oh, by the way, can you verify your information? So all these delays caused to go to underwriting, and then they ran out of money. So walk me through my experience there. Because again, I want to summarize. Bank of America, you don't have a loan relationship. When I go to Chase, oh, we don't have a deposit relationship. That's just half-assed. So walk me through that, please, David.
Yeah, well, there was a belief at the very beginning of all this that the community banks and sort of the regional banking institutions were going to be left out, and that the big banks were going to really just scoop this program up and get the lion's share of the benefit from it. And the absolute opposite has happened. I'm super familiar with the Bank of America scenario. We have a deposit relationship with Bank of America, so I saw the communication coming out from them that said, hey, we're going to prioritize those that have the lending relationship. Chase, Wells Fargo, Bank of America, US Bank, all way behind. And unfortunately, when you build a program that has a first come, first serve basis, two things happen. One is they focus on the customers that they deem to be the most important to them, and they also focus on the squeaky wheel. So if you sent that in and weren't literally just writing them to provide you with those updates, it's not surprising that they didn't get to you, because they are just bombarded. It's important to take a step back and say two things. One is, they are trying to process literally 100 times their normal volume in a 90-day period of time, and that's about to get increased. So understandably, they're under a lot of pressure, but the unfortunate reality is the way that the system was designed did not provide an incentive for them to help the businesses that really need it the most, and those are the real Main Street American brick and mortar small businesses. Like in your case, you talked about UPS stores. That's a great example.
Well, but I like to have a real relationship. But like, I hate it when you go in, and Wells Fargo got chat for this. Hey, why don't you open up a checking account? Just throw $500 in, and we're able to do this for you. Why don't you open up another credit card? And I don't like all that nonsensory. And I didn't open kind of like a symbolic account with Chase because I just wanted a credit card from them. Like, I'm a consumer, and it seems like they're almost forcing you to expand the relationship. Okay, so then that's on the UPS store side, right? Then on the X Factor side, so to give you some background, I'm a Jersey guy, I'm Italian, I got a guy for this, you got a guy for that. We value our relationships. So I call somebody who I tried to do TD Banks. I had my banking relationship with them. And then there was something along the lines of, well, you're all 1099s, as well as you don't have a physical location. You're not included. I'm like, okay, that's what TD Bank told me. Because I was a priority for them. And then I called a guy that I knew really well. He goes, hey, listen, I actually have somebody, local bank. You have to become a member, but they'll help you out. So I did it through them. And then this is like, I have a relationship, like I have a relationship with you. And he gave it to us that he has a good relationship with, and I got thrown into line. I wasn't a member, and I got boxed out of there. So I applied through Lendio, which is like an online fintech, I believe.
Yeah, it's a marketplace.
Pardon?
It's a marketplace, yeah.
Which I don't understand. Like PayPal's not involved. I don't understand why they didn't go to. I know it bottlenecks at the SBA. I know that, but they could have got fintech involved earlier, which is another discussion. So what I'm getting at is I applied for 2 PPPs. One got really far advanced, and now I'm here, they're out of money. The other one got submitted, but I didn't hear back. So what do I do? I need money, David. So like, do I, and we'll get to other stuff in a second. Do I do nothing? Like, do I say, okay, write off PPP? What's going on with PPP today?
Yeah, no, so I would not write off the PPP. In my opinion, you'll see that ceiling raised here within hours, if not days. And I think it's really important that you stay on those banking relationships where you've applied, and make sure that they know that you are really paying attention. The good news is actually you've put yourself in a good spot. One, dealing with multiple banks at the same time. Most of the people that I know that have been funded were not selling out to one institution. There's nothing that says that you can't apply with multiple banks at the same time. That was actually something that was being spread. But if I was an entrepreneur right now that was applying for the PPP, I would make sure to talk to as many people as humanly possible. The good news is actually, as of yesterday, I was involved in a local entrepreneurship discussion on the PPP, and 4 people on there told me that they were having an outstanding experience with Lendio, and 2 of them had already been funded through it. So I'm glad to hear that you're working with them. Lendio is just a marketplace, so they've been taking in applications, and then they're taking those to institutions that are raising their hands saying, yeah, we'd like more of these types of loans. Originally, I was not of the belief that they were going to win in this environment, but to my understanding is that they've already processed about 27,000 applications. So I think you're doing the right things. I would just be more aggressive in your interactions in terms of trying to stay top of mind.
Got it. Okay. So, so at this point, I think I exhaust, I'm going to keep on them and keep emailing and do that kind of fun stuff. But like for now, I still got to, nothing's going on but the rent, right? So I still got to pay. And don't get me wrong, we did everything. So I'm not going to even get into it. Got, landlord on the store side, paid half for rent, working on a sliding scale. And as of actually this, I'm going to ask this question. My store side, here's how I prioritize the bills. 1, payroll, because I could say I haven't laid anybody off yet. 2, UPS, because they're the core vendor for the shipping. 3, the rent, and then 4, anybody else. Am I right on that, or as a financial planner, am I being too good to the employees? Walk me through. Are you okay with that priority?
I absolutely am. I
Okay.
can tell you that it makes sense to me that you would prioritize your people first. I think that says a lot about you as a business leader.
Okay.
And then clearly you need a location to operate from and a provider to do a big part of your business, right? So those things make total sense to me. I'm glad to hear that you've negotiated with your landlord. You're doing all the things that I'm hearing from our franchisee clients around the country that they're doing. To make sure that they can limit cash flow. Now, a couple things that I'll point out, because since you asked about people, and we've been talking about the PPP plan, you still are at the end of the day a business owner, need to make sure that the core of the business survives so that you can continue to employ people long term. I have seen organizations that have done organization-wide pay cuts, and they're tiered based on how much the individual makes. I've seen people furlough individuals. The PPP program is flexible enough, though, that when you do, and I believe you will, when you do secure those funds, you can always bring those people back, provide them their original pay rate. You can provide crisis payments if your lender approves it. So I think there's a lot of flexibility that you have, but obviously you got to do what you can in absence of getting that PPP to make sure the business survives.
Got it. All right, there's more. Where's Guidant out of? Because some of it's Jersey centric, and you obviously don't have to be in a Jersey to get your opinion. Where's Guidant out of again?
Yeah, so we are at ground zero. We're in Seattle, Washington. So where this thing all kicked off originally here in the U.S.
That's right. Okay, that's right. I saw it on the notes. Okay, so New Jersey came out with the same time with the EIDL. Hey, 5K, quickly. The kind of a New Jersey-based EIDL applied for both businesses. Didn't hear back anything. I'll skip over that. I'm assuming New Jersey got inundated. It was only 5 million. It got through quickly. So I exhausted that, right? Then New Jersey came out with kind of their own SBA thing, which was a zero interest loan, a full loan. It wasn't any forgiven. And I haven't heard back from that, okay? So, I don't want to call my mobbed up uncle. He charges too much. Where do I go now? So I exhausted kind of the emergency, help me, but I don't want to go to the streets. What's next for me, David?
Yeah, it's a tough one. I mean, this is a really, really complex situation because if you go to the traditional financial institutions, they're really not lending to businesses that are under stress today. So the things that we're seeing that people are doing today, one, I've seen people do credit cards in terms of making sure that they're being able to maintain some cash. They're using home equity lines of credit. But there is another option, which I don't know if you've ever heard of rollovers for business startups, but many of our clients are recapitalizing their business using retirement assets. And there's 3 ways that you can actually do that. So the first one is, as part of the CARES Act, they actually extended the definition of hardship withdrawal for people that have been impacted by coronavirus. Well, we all have, so it's a very loose definition. But you are able to take up to $100,000 out of your retirement plan for the next 3 years. And as long as you repay that within 3 years, it's not considered taxable, and there's no penalty for pulling that out. And if you do not put it back in 3 years, then you're going to pay taxes in 1/3 installments over the following 3 years. So that's one way to get some cash flow in the near term, is if you've got a 401k plan there that has got some extra dollars and you could pull those out. They also expanded, the second piece is they expanded the capabilities of the loan. So you used to be able to take 50K or 100% of your vested balance, whichever is less. You can actually now take 100K or 100% of your vested balance, whichever is less. So they've doubled your ability to access capital through retirement plans. And on the loan, the first 12 months payments are deferred. So technically you take that money out and within a year return that, and all you would pay was a small amount of interest.
What's the interest on it? And I'm assuming you're paying back yourself, so it's a good thing. What's the interest on something like that?
Correct. Yeah, it varies based on whoever is administering to your 401k plan. But I would just consider it's going to be somewhere between 5 and 7%. So it's still very cheap money. The third,
I didn't know that. I don't want to go that route. That's more like the canned goods and ammunitions route for me. But
yep.
we're not that far off.
Yeah, a lot of people are in that scenario. But there is a third one, and so I'll share this with you real quickly. And the third one is what they call a rollover for business startup. And there actually is a way, and many people, in fact, a lot of franchisees in your system have done this, have bought their business initially with retirement assets. So instead of buying stock in Microsoft, which is a perfectly viable investment, they have bought stock in their own small business, one that they're going to work in and help to generate value within. And in this particular case, if you believe that your business is just suffering from a short-term issue, you could actually set up a basically transaction where you take retirement assets and invest them in your business. So it's not a taxable distribution. It's not a loan that has to be paid back in any period of time. It's just that at the end of the period at which you own that business, when you decide to sell, that the retirement plan would benefit from that sale, just like any shareholder would.
But you have to, I hate that. You don't want to time something like this per se, because, you want to think long term. But this makes sense when the market's doing a little better, no?
Well, I think it depends. Again, this is why I said at the very beginning, you have to believe that this is a short-term issue for your business and that you will survive it. You don't want to throw a Hail Mary with your retirement assets, right? Like that's the ideal scenario. But if you believe that your business is going to survive, it's just a matter of it needs some capital injection to just weather this near-term storm, and you think it's a good investment, you certainly have the capability to do that.
Now, how are you? Okay, so this may not be your wheelhouse, but I trust you as a smart business person. I'm almost overextending myself for some clients if they're closed. Now, I have two parts of my business. I have the ad revenue, I have the ad side, which is more transactional. Then I have a retainer, which is relationship. And I found the ad side, I got to be really honest, and I'm not knocking anybody in particular, but I saw like a lot of ugliness, meaning I come from the land of kind of a deal's a deal. And if there's a material event that has an especially exogenous, I believe in, hey, I'm having an outside event affect my ability to pay. Let's talk about it. But you can't pull out of an ad that already ran. You know what I mean? So I'm not gonna lie to you. I've seen some real ugliness on the transactional ad side, but on the retainer side, where you expect them to, it's a higher retainer in the thousands. I expect some ugliness in there. I found my clients, for the most part, to be reasonable. But where I'm struggling with is I'm still did work or continuing to get, do work from folks, and I want to get paid. And some are kind of give me the razzle dazzle, hey, I'm suffering too, but hey, can you do this for me? And I'm just seeing a little bit of ugliness. So, how do you collect in this environment where you did the work or you're doing the work, but also being sensitive? So how do you balance that out?
Oh man, when you figure that out, let me know. Here's what I'll tell you. At the very beginning, when you gave the introduction, you suggested, or you shared that we've got thousands of small business customers that we serve every day around the country. Well, I have to tell you, for years I've thought to myself, we have an amazing business because we have we don't have any customer concentration issues. Here in Seattle, I know so many businesses that are fully funded because they have a partnership with Microsoft or Google or Amazon. We've got, our average customer pays us about $1,600 a year, $140 a month. And so, you could have a hurricane, you could have wildfires, you could have an earthquake. And yes, it would impact that geography, but our business was fairly impenetrable. Well, the pandemic has certainly exposed that even we can be at risk under certain circumstances. And so one of our top priorities right now is exactly what you just said. How do we make sure that we can continue to support the customers that are operating? And how do we also deal with empathy, knowing the struggles that they're going through every single day? And so we've had to adjust our collections efforts to be a little bit softer and make sure that people know, hey, look, we're a small business too, but we understand what you're going through. So do what you can. And I would say that in general, we've seen the best side of humanity, but you're right, under stress, people act very differently. And so I've seen, similarly, some of the stuff that you have where we've billed someone who's on automatic payment and they've called and, screamed at our service reps. But they were on auto pay and they've known that forever. So I think the best thing that you can do is just understand as with your business, what you are capable of supporting, and then do the very best you can.
Okay, so I want to summarize. So if you did the EIDL, guys and gals, we're not dead yet, but don't hold your breath. PPP, you're fairly confident. You don't got a crystal ball. Otherwise, you and I would head down to the track if it was open. But you feel pretty confident about that as a competent business person. You can dip into retirement savings if you needed to, which has a little bit more flexibility. I just want to make sure, but this is what I don't get though. I am Jones Bank, right? Because I know, there's over 4,000 local banks that participated. I'm a local bank, and why not mop up in kind of the secondary? I don't want to get into tertiary. I don't want to get into the whole, the credit card merchants and the 17% interest and, like the Shylocking, right? I call it. But like the secondary market of like, hey, local bank, hey, you have business loans. Yeah, they're 6.75%, get a line of credit. Are you doing SBA? Oh, no, we're not, but we're doing business loans. Why isn't there more of a broader market for business loans? And you answered the question earlier about distressed business owners. But on the UPS store side, believe it or not that we're making money, but I'm less distressed on that side. And I think I would qualify for a loan. So why aren't like the secondary providers, meaning local banks that are non-SBA, why isn't there more available that way?
Well, there are actually. So I guess I should have clarified this at the very beginning. If you are operating today, if you've historically had good performance, and if you're in a position where you're able to generate revenue, and some businesses have done even better through this crisis. If you're in sanitation or cleaning, things like that, like those businesses are booming right now.
True.
In those cases, there are different programs available. So you'll have to see, like, are my trends up or down? If they're down, that's going to be a much tougher road for you. By the way, one thing I'll note, you asked what could you do outside of that, and I'm sure you've thought of this. I'm sure the franchisor has given you some perspective on this. But what I've seen happening around Seattle is that the business owners are being very open and vulnerable about where they are. And by the way, I applaud you for doing this on this podcast, right? Everyone knows there's a pandemic. There's no secret here. So nobody thinks that, businesses are all doing well and so on. And so what I'm starting to see a lot is the businesses that I have frequented, I'm getting emails saying, hey, we're selling gift cards. We're if you'll buy something for, the firemen and the policemen and the frontline workers, will give a little extra bonus to you, right? Like they're doing things that are drawing attention, and we all know what's happening. I got a note from my house cleaner. Obviously people are not inviting a lot of individuals into their home on these stay-at-home orders, and even though they are technically essential workers, my family doesn't feel comfortable having people come into our home who are also going into lots of other homes during this situation. So we just prepaid a couple months worth of cleanings.
Yeah, and I was thinking about that too. For the UPS store side, I was thinking about maybe selling gift cards.
Totally.
But okay, so what is a real detail? How do I want to sell a gift card that's indigenous to the store. Do I just do old-fashioned gift certificate and have them pick it up because it's a local store? Is there a vendor I can use? Like, how do I execute that?
It's a good question. I actually don't know the answer to that. I
Okay.
suspect that your franchise would know better than I would.
Yeah.
But I mean, there's also just the ad hoc way of doing it. And like I told you, with my cleaning service, I basically just said, hey, look, I know it's tough times. Cash is tight. You've been a great provider for us. I'm going to Venmo you 2 months worth of payments, and that's going to help sort of bridge the gap.
Love it.
So
And that may be a quick way to, get some pre-earned, what is unearned money, whatever it is, like an advance, if you will, to do that. All right. So Dave, you've been great. You didn't need to do this. You took some time out of your valuable time, and our listeners are appreciative. Before how we share, how do we find you? What does Guidant do? Because I want to, promote your business a little bit too.
Yeah, I appreciate you asking. Well, Guidant Financial, we help individuals that are looking to start or buy a business to find the capital that they need through SBA loans, unsecured credit, rollovers for business startups, and equipment leasing. So if you are thinking of starting or buying a business, we could be a great resource. And then on the back side of that, we provide business services to help them sort of create greater efficiencies in their business. That's things like 401k administration, payroll, bookkeeping, and tax, things of that nature. And interestingly enough, we've done a ton of work with your brand, so I'm very familiar with the model and a big fan of it.
Nice. And then how can we find you, David?
So it's simply on the web. It's just guidantfinancial.com, and Guidant is Guidant. So guidantfinancial.com.
Awesome. David, thank you for being on the New Theory podcast.
Thanks for having me.